What's up, you certified beauties? It's Nick here, back with another video. In my previous CERB video, I talked about how the Canada Revenue Agency, the CRA, was sending out letters to many Canadians requesting that they repay their CERB money back by the end of the year. Now, what was happening was people who applied for the CERB were under the impression that if you were self-employed, you could apply if you earned $5,000 of gross income, and the CRA is saying, no, you needed $5,000 net income, therefore you don't qualify, therefore pay this money back by the end of the year, December 31st. And the reason why December 31st was such a big deal is because the CERB and all the Canada Recovery benefits are taxable benefits, which means if you don't repay that money by the end of December, it's going to be taxable. Now, a lot of people in my comment sections are asking, what if I don't pay this money back? How much tax am I going to have to pay on this income? Well, in today's video, we're going to find out exactly that. I know I've made a couple videos like this in the past, but because it's near the end of December, you kind of have a better idea of how much you've received in employment income or self-employment income or passive income. And so you're gonna have a better idea of how much you've earned during the course of this year. And also, I'm gonna be introducing a new tax calculator through a company called Cloudtax. And I really think it's a very simple, easy tax calculator for you guys to use. It takes a lot of guesswork and math out of the equation, so you can just kind of plug in and play and see what your tax owing is going to look like. So that's going to be today's video. If you get value out of this video at any time, I just ask that you give it a thumbs up. What that does, it just lets me know that you got value out of this video, and it also pushes this video out to more people. So if there's people out there who need to see this kind of video, giving the thumbs up helps get that video out there. So I'd really appreciate that. And also, if you're new to the channel, hey, thank you for tuning in. And I just ask that if you like this kind of stuff, to please consider subscribing. So let's jump right into the content. The first thing I want to do is show you an example of a pay slip. And so this is where we're going to look, if you are an employed person, how much income and how much tax you've earned this year, because those are going to be two very important things that we're going to need to play into the tax calculator. So the first thing I'm going to do here is share my screen, and I'm going to show you an example of a a pay slip. And so here's a pay slip. This is a very common one that I see. This is a dummy pay slip from the University of Waterloo's website. So there's no personal information on here, but this is a good example. So here on this pay slip, section number 2, we see the current gross pay and then also the YTD. YTD stands for year to date. So I want you to take a look at your year to date income. Make sure also that you grab your most current pay stub. And so this will give you the most accurate information. So for this example, if you look here, your gross pay year to date looks like $9,429.70. And then if you move a little bit over to the right, you can see employee taxes at $2,080.84 year to date. So this pay slip here, right, it shows you the current and it shows you the year to date. All of your pay slips that you receive should have both of these numbers. So I recommend grabbing your most recent pay slip. Take a look here up at the top, gives you the pay period, when it began, when it ended. So you can have an idea. Make sure that you're grabbing the most current one in December or whenever you finished work, and take a look at that year to date. Now here is that tax is $2,080. It also has the tax information down here in section 4. You can see here again the amount for this current pay slip, and then also the year to date pay slip. So we have CPP, EI, and then our federal income and our provincial income tax. And we can see here our total taxes that we paid this year to the government is $2,080. So the government is getting your taxes from your employer. What's happening is your employer is withholding these taxes on your behalf and sending them off to the CRA. So that way at the end of the year, you don't have a big lump sum owing. So we're going to take these numbers. For you, you're going to take your year-to-date taxes paid and your year-to-date gross pay from your employer. If you're self-employed, obviously this doesn't apply, but if you are employed by someone, you're going to take these numbers and you're going to plug them into this tax calculator. And so we're going to use Cloudtax. Cloudtax is a newer tax software out there. It rivals a TurboTax or H&R Block or whatnot. And this one is really intuitive. You can use it on your mobile device and file. So if you haven't filed your 2019 taxes and you've been meaning to get around to it, now is a great time to do it, and also do it through Cloudtax. They actually have a sale right now going on. If you haven't already filed your 2019 taxes, you can get an expert to file your taxes for you for $29.99 per return. So there's some good value there through our friends at Cloudtax if you want to do it by yourself and employ basically a tax expert to help you walk through it. I definitely recommend checking out Cloudtax. Also, they also have this really cool tax calculator, and I'm going to link that in the description below for you guys to check out. And this here is going to just walk us through our income for the year, and it's automatically going to calculate our taxes. So this is really simple for you guys, takes a lot of the work out of it, and you just kind of plug and play with this tax calculator, and you can see how much tax you might owe or what kind of refund you might expect. So you want to start by putting in your province. So for me, I'm going to put province of Ontario because that is my place of residence. But wherever you reside at the end of 2020, that's going to be the province that you put in that section. So for us, we're going to put Ontario. Now here, this is where you can put your employment income in, or the section below, your self-employment income. For this example, this is totally hypothetical. I'm going to put in employment income, and I'm just going to put in a random number. I'm going to put in 15,000 right there. And you can see it's already doing a calculation for us. It's saying our estimated balance owing would have been $171, and we would have paid $171 of provincial tax. And it's assuming $841 in CPP and EI premiums, which would have already been paid through your paycheck already, like we saw in the pay slip. So because it's employment income, it's also factoring in CPP and EI, which is really cool. It's saying that our total tax for this year is $1,011, which is the $841 of CPP and EI premiums plus your provincial tax. And then it also shows your after-tax income there, your average tax rate, and your marginal tax rate. So average tax rate is how much you've actually paid in tax this year compared to your income. So for us, it is 6.74% we paid in taxes on our 15,000. The marginal tax rate is how much tax we would pay on, say, another dollar of income. It's what's the tax rate if I earned more income. So that's what the marginal tax rate is, and that's why it's different from the average tax rate. The average tax rate is kind of like what you want to look at kind of at the end of the year, say how much did I actually pay in tax on my income, and that is what you would look at. So if you earned 15,000 of employment income, your tax rate would have been 6.74%. Okay, continuing on. For this example for me, self-employment income, I'm going to assume that there's none, but if you are self-employed, this is where you're going to put in that self-employed income. If you want to have CERB, CSB, EI, and other income, this is where you would put that information. So we're definitely going to put something in there. I saw an article the other day. It was actually saying that there was a woman out east, I think it was Nova Scotia, and she received a letter from the CRA saying that she had to return all of her Canada Recovery Benefit money because she didn't actually qualify, and that amount was $18,000 total. So that's between the CERB and what other recovery benefits she received. Yeah, that's a lot of money. So I'm going to put in 18,000 just because of that article. So 18,000, no capital gains, no dividends or ineligible dividends. And for income tax paid, I'm going to say $3,000. Again, this is where you're going to want to take a look at your year-to-date income tax paid and insert that amount there. So with this being said, we have a total income of $33,000 and a total tax paid of $3,000. It says here our estimated balance owing is $1,032. So if this is your situation, when you file your tax return, you can expect to pay an extra $1,032 in taxes when you file your tax return. It also breaks it down nicely for us. So our federal tax would have been $2,653 and our Ontario tax $1,380 with our $841 CPP and EI premiums, giving us an after-tax income of $28,127. You can see here it gives us a nice breakdown of where our taxes went and our average tax rate now being 14.77. What I also really like about this calculator is we can now fool around with RSPs. What's great about RSPs is it reduces your taxable income, and therefore you can contribute to your RSPs and lower the amount of taxes you have to pay, which often leads to a refund. So in this situation, because we have a balance owing, you can fool around and see about contributing to an RSP and lowering that amount of tax. So I can fool around with this and say, let's say if I contributed $5,000 into my RSP, my estimated balance owing would now be just $30. So you can see, you can play around with the RSPs and see how much you can contribute to lower your taxable income. What's also great about RSPs is that you actually have the first 60 days of 2021 to contribute to an RSP, and you can use those contributions to apply towards your 2020 tax return. So I can use January and February to contribute to my RSP and affect my 2020 taxes. So you can do this in the new year once all of your information is calculated, and you can figure out how much can I contribute to my RSP so I can reduce this balance. So that's kind of a cool trick here, and the Cloudtax calculator makes it really simple for you guys to play around with that number and kind of figure out what your taxes would look like. So that's today's video. That's how you calculate your CERB tax, your CRB tax, your CESB, any other kind of recovery tax, and your taxes in general. Use this calculator here at Cloudtax. Again, I'll have the link down in the description for you guys to click on and access. If you have any questions, feel free to let me know in the comments below. And again, if you got value out of this video, please give it a thumbs up. I'm Nick from Nick's Taxes, and as always, happy taxing.